A tale of two markets today. The Dow surged 537 points on blockbuster earnings from Coca-Cola and Boeing, but the NASDAQ slipped as a global semiconductor sell-off hammered chip stocks. AMD crashed over 8%, Intel dropped nearly 6%, and the carnage started overnight when a Chinese memory chip maker's IPO shook the entire sector. Meanwhile, oil prices collapsed over 4% after President Trump signaled progress on an Iran ceasefire, and Apple quietly became only the second company in history to reach a $5 trillion market cap. Oh, and the Federal Reserve just kicked off its two-day policy meeting. Welcome to Invest from Zero, your daily U.S. market wrap. I'm here every single trading day to break down what happened, why it matters, and what you should be watching next. It's Tuesday, July 28th, and we have a packed show today. We'll start with the S&P 500, then move to the NASDAQ and the Dow. After that, all 11 sectors one by one. Then the biggest stock movers, our stock of the day with a full 30-day chart, the macro dashboard covering VIX, yields, gold, and oil, and we'll close with 3 things to watch before tomorrow's opening bell. If you're new here, hit subscribe so you don't miss an episode. Let's get into it. Let's start with the benchmark, the S&P 500. Today, the index closed at 7,428.78. That's higher by 0.21%, or roughly 16 points on the day. Yesterday's close was 7,413.18, so we're looking at a modest gain despite absolute chaos underneath the surface. For the week so far, the S&P is down about 0.9%. Here's why the S&P barely moved while the Dow surged and the NASDAQ dipped. It's all about rotation. Massive selling in semiconductor stocks was offset by strong buying in healthcare, consumer staples, and communication services. 9 of 11 sectors finished green, but the 2 that were red, technology and energy, carry enormous weight in the index. Consumer confidence data also came in soft, ticking lower to 90.8 in July, which reinforced the defensive rotation theme. Institutional money was clearly moving out of high-beta chip names and into safer, dividend-paying corners of the market. The S&P 500 held up, but the internals tell a much more dramatic story than that 0.2% headline suggests. Now let's move to the other 2 major indices. The NASDAQ Composite lost 0.22% today, closing at 24,877, and the real story is why. A global semiconductor sell-off absolutely hammered chip stocks. It started overnight in Asia. SK Hynix plunged nearly 15% in Korea. Samsung dropped over 13%. And when U.S. markets opened, the selling continued. The iShares Semiconductor ETF, ticker SOXX, dropped 5%. AMD fell 8%. Intel lost nearly 6%. SanDisk collapsed over 14%. The catalyst was a Chinese memory chip maker called CXMT, which debuted on the Shanghai Exchange yesterday, raised $8.6 billion in Asia's largest IPO of 2026, and surged 466% on day one. Its market cap hit $487 billion. That's nearly half of Micron's valuation, and it sent shockwaves through every memory and semiconductor name globally. On top of that, reports that NVIDIA is exploring a $250 billion funding backstop for OpenAI raised concerns about circular financing in the AI ecosystem. Now the Dow Jones Industrial Average, a completely different story. Up 1.03%, gaining 537 points to close at 52,747. That is the best day for the Dow in weeks. Boeing surged on earnings. Coca-Cola had its best day since 2009. Sherwin-Williams popped 8%. Classic blue chip defensive strength. The 1.25 percentage point spread between the Dow and the NASDAQ tells you everything about where the money is flowing right now. Now let's get into the sector breakdown. Today, 7 of 11 sectors finished green for in the red, and the pattern screams defensive rotation. Leading all 11 sectors, healthcare up 2.4%. Pharma and biotech names rallied as investors sought safety away from volatile tech. In second place, consumer staples at plus 2%, supercharged by Coca-Cola's blockbuster earnings day. Third, communication at plus 1.87%. These top three sectors are classic defensive plays, and they dominated today. The middle of the pack, materials plus 1.85%, consumer discretionary plus 1.48%, financials plus 1.27%, and real estate at plus 0.55%. Now the laggards. Utilities at minus 0.35%, industrials at minus 0.39%. Energy dropped 1.35%, pressured by the oil price collapse after Iran's ceasefire progress. And bringing up the rear, technology down 1.84%, dragged lower by the semiconductor carnage we just discussed. The spread between the best and worst sector today is 4.2 percentage points. That is a wide spread, and it tells you this is not a normal day. When healthcare and consumer staples lead while technology and energy bring up the rear, that is textbook late-cycle defensive positioning. The market is not panicking, but it is clearly repositioning. Follow the sectors. They tell you the story before the headline does. Now let's look at today's biggest movers, starting with the number one gainer. Coca-Cola, ticker KO, absolutely surged today, up 5%, closing at $88.27. This was Coca-Cola's best single day since 2009. The catalyst was clear. Earnings crushed expectations. Volumes came in strong across all regions, and the company specifically called out a boost from the FIFA World Cup, driving international beverage sales higher. For a company the size of Coca-Cola, a 5% move adds billions in market cap in a single session. But here's the bigger picture. On a day when chip stocks were getting destroyed and risk appetite was collapsing, investors piled into a defensive consumer staple name with a rock-solid dividend. That is not a coincidence. Coca-Cola became a safe haven today. When a market is rotating into names like Coke, it tells you that big money is positioning for uncertainty, not chasing growth. If you own KO, congratulations on a great day. If you don't, watch for a pullback. Chasing a 5% gap up is risky even in the safest names. Rounding out the top 5 gainers. Number 2, ADBE, up 4.8%, closing at $249.18. ADBE rallied as software names attracted capital fleeing the semiconductor space. Number 3, Boeing, up 4.8% to $221.56. Earnings came in strong and delivery numbers are improving. Number 4, Salesforce, up 4.5% to $181.50, also benefiting from the software rotation. Number 5, Berkshire, Warren Buffett's Berkshire Hathaway, up 3.1% to $512.37. Classic flight to quality. Now, let's flip to the painful side. The biggest loser today, AMD, ticker AMD, dropping 8.15% to $454.62. This was not company-specific news. This was a global semiconductor sell-off that hit every chip name on the planet. AMD got hit harder than most because it sits right at the intersection of AI, compute, and traditional chip competition from China. When a Chinese competitor debuts at a $487 billion valuation, AMD investors get nervous. The question now is whether this is a one-day washout or the start of a deeper correction in the chip space. Tomorrow's price action in Asia will give us the first clue. The rest of today's biggest decliners. Intel dropped 5.9% to $86.30, caught in the same semiconductor downdraft. Intel's exposure to the memory and foundry business makes it especially vulnerable when Chinese competition fears surface. Qualcomm dropped 4.2% to $162.88. Its mobile chip business facing pricing pressure as Chinese competitors ramp production. Notice a pattern? 3 of our 5 biggest losers are semiconductor companies. Caterpillar dropped 3.7% to $840.85. As a bellwether for global industrial activity, Caterpillar's weakness suggests some caution about the economic outlook. Goldman Sachs dropped 1.4% to $1,033.34, a modest decline amid broader market rotation. The average decline among our bottom five is 4.7%. That is serious selling pressure. But here's the silver lining. This was concentrated in chips and industrials, not a broad market panic. 9 of 11 sectors were green today. The market is repricing specific risks, not running for the exits. Time for our stock of the day. Today that goes to AMD, ticker AMD. Let's put this under the microscope. AMD dropped 8.15% today, closing at $454.62, its biggest single-day decline in months. Now let's zoom out. Over the last 30 trading days, AMD has ranged from a low of $454.62 all the way up to $580.91. That's a 28% trading range in just 1 month. Today, AMD hit its 30-day low. That is a critical technical level. The sell-off was driven by 3 converging forces. First, the CXMT IPO in China. This memory chip maker debuted an $8.6 billion valuation, surged 466% on day one, and reached a market cap of $487 billion, nearly half of Micron's. That kind of competition from China terrifies semiconductor investors. Second, reports that NVIDIA is exploring a $250 billion funding backstop for OpenAI raise questions about circular financing in the AI ecosystem. Is the AI trade becoming a house of cards? And third, pure contagion. When SK Hynix drops 15% in Korea and Samsung drops 13%, that selling wave hits every chip named globally. AMD, as one of the most popular retail and institutional holdings in the semiconductor space, caught the full force of it. For long-term investors, the question is simple. Has AMD's competitive position changed? If not, this could be an opportunity. But wait for the dust to settle. When Asia opens tonight, we will know if this sell-off has more legs. Now let's pull up the macro dashboard. First up, the VIX. Wall Street's fear gauge closed at 18.2, falling 2.5% despite the chip carnage. That is interesting. The VIX sitting in the 15 to 20 range tells you the broader market is not panicking. The chip sell-off is being treated as sector-specific pain, not a systemic risk event. Next, the bond market. The 10-year Treasury yield fell to 4.6%, down about 4 basis points. This matters because the Federal Reserve just kicked off its 2-day policy meeting today. The decision comes Wednesday. The CME Fed Watch tool shows a 31% probability of a rate hike in July and a 75% chance of a quarter-point increase in September. The consensus is the Fed holds steady tomorrow, but the language in the statement will be critical. Any hawkish surprise could crush growth stocks further. Gold fell 0.9% to $4,036 per ounce. This is notable because gold usually rallies on geopolitical uncertainty. But with Iran's ceasefire talks progressing, safe haven demand is fading. President Trump said there's, quote, a good chance something could happen in diplomatic negotiations with Tehran. And that brings us to crude oil. WTI collapsed 4.1% to $79.26 per barrel, down from $82.61 yesterday. Brent crude dropped over 5% to $83.80. The Iran ceasefire optimism is the primary driver. If tensions continue to de-escalate, we could see oil prices fall further, which would be a relief for consumers and a headache for energy stocks. Putting it all together, the macro picture is sending a clear message. Risk is rotating, not disappearing. All right, let's close out with my watch list for tomorrow. 3 critical things I'm tracking heading into Wednesday. Number 1, the Federal Reserve decision drops tomorrow afternoon. The market expects no change, but the statement language matters enormously. If Jerome Powell signals that a September rate hike is coming, growth in tech stocks could sell off hard. If he sounds dovish, it could trigger a relief rally. This is the single biggest event of the week. Number 2. Big tech earnings are coming in hot. Microsoft reports after the bell tomorrow, followed by Meta and Amazon later this week. Apple just hit $5 trillion in market cap today, after Alphabet and Tesla both dropped on disappointing results last week. The pressure on this week's reporters is enormous. Any miss could extend the tech sell-off. Any beat could reverse it. Number 3. Watch Asia overnight for chip stocks. If SK Hynix and Samsung stabilize, the semiconductor sell-off could be a one-day event. But if Asia sells off again, expect another ugly day for AMD, Intel, and the entire SOX ETF. The first 30 minutes of trading in Seoul and Tokyo will set the tone. Write these down, set your alerts, and be ready when that opening bell rings. And that is your complete U.S. market wrap for Tuesday, July 28th. What a session. The Dow surged 537 points, while chip stocks got crushed. Coca-Cola had its best day since 2009. Oil crashed on Iran's ceasefire hopes. Apple became the second company ever to hit $5 trillion. And the Federal Reserve just started its two-day meeting with a decision coming tomorrow. We covered all of it. The S&P 500, the NASDAQ, the Dow, all 11 sectors, the biggest movers up and down. AMD is our stock of the day with a full 30-day chart. VIX, bonds, gold, oil, and 3 critical things to watch before tomorrow's bell. If you found this valuable, hit that subscribe button and turn on notifications. I'm here every single trading day. Drop a comment and tell me, are you buying the chip dip or staying on the sidelines? I read every comment. Remember, nothing in this video is financial advice. Always do your own research. I'll be back tomorrow with full coverage of the Fed decision and big tech earnings. Until then, invest smart, invest early, and invest consistently. This is Invest from Zero. Good night.